All right. Let me know if you guys hear me. I don't really do YouTube tutorials on my channel, so not quite sure how this works. I'm gonna pull up the Discord here to see. Oh, okay. Looks like I got 2 viewers. Can I see myself though? Hey guys, if you hear me, just give me a thumbs up in this live chat so I know that there's people here watching. Okay, well, anyway, I'm just going to carry on with my analysis here, guys. Okay, on the 4-hour chart, right? Like I talked about yesterday, we're going to have this descending trend line resistance, this yellow line right here, coming back all the way from, let's see, way back here. Okay, March cuts through May, cuts through July, even September, and now we're facing that same trend line resistance. And remember that we can still exceed it a little bit and then come back down again, especially if that $6,800 resistance is still right above us. That's still going to be holding us down. Okay, so keep that in mind. Jeff in our channel was actually talking about tweezer bottoms or tweezer tops. I think it's tweezer tops, at least from what I can see. I don't see tweezer bottoms anywhere. Basically, tweezer tops are essentially candles that are equal sizes, kind of like these two right here, right, in terms of their body. And these, at least at the top, this one signifies almost a bearish engulfing, meaning that the next body, this entire body of the candle swallows the body of the previous bullish candle. And as you can see, the open and close of this candle is 6587, 6639, and this one is 6585 and 6639. So pretty much completely, swallows it, right? So that's kind of how you would define bearish engulfing. And so this signifies actually further downside, kind of like, this right here. And we'll have to see if there's a follow-up candle with that. Let me throw on the Ichimoku cloud and see if there's anything weird that I see. And yep, on the 12-hour Ichimoku cloud, as you can see, we're right in the brink of trying to pierce the cloud, but the cloud is essentially rejecting us and we're being thrown out. So it's kind of like, an unruly passenger trying to climb onto a plane, right? Just get thrown the heck out. So that's kind of what's happening with the cloud and its resistance. Okay. I did have a really interesting topic that I spoke about yesterday in terms of order blocks. So let me pull that up here real quick. Close out of this. Close out of this. So this is a chart that I drew up, and I was going to talk about it tomorrow. This is a big lesson that I want to talk about. But since I got some dedicated people wanting to learn, I will talk about it a little bit today. Okay. So I know there's a lot of stuff happening, and we're going to get through all of it. So let me just go left to right. Okay. First things first, we are in this order block. Okay. First of all, what the hell is an order block, right? And why have I been incessantly talking about it over and over? All right, so order blocks, guys, are it's a different way to look at like support and demand levels, right? Or support and resistance levels. I'm sorry, supply and demand. So basically, traders or investors, fund managers, they can identify reversal or re-entry opportunities by looking at exactly from where did the bullish move start or where did the bearish move start. Okay. So looking at this chart, right, as you can see, first level down here from 4624 or 4694 down to 3000. After this, we made a bullish move all the way till 7500, right? So almost tripled our price in about 1, 2, 3, 4, 5, 6, 7, 8 weeks, okay, in less than 2 months. So tripled our price in 2 months, right? So this right here is a bullish order block. After this, what happened? We came back to a stop, went all the way to 7,800, 7,900, came back down in a large bearish engulfing candle, caught a lot of buyers in this area, in this weekly candle, right? And boom, we took off from this run way back in 5,400 and did not look back till 20,000. So this can be seen as a bullish order block or demand zone, however you want to look at it. Okay. So what are the characteristics of a good order block? Okay. So basically, guys, you want to see a trend created out of a order block, right? A new trend. So for example, when the trend ended up here, right, you saw a big reversal candle. In this candle right here, all the exhaustive supply, meaning that the retailers who were selling, they dumped and the institutions picked it all up and pushed the price even higher. Okay. This is a bullish order block. Okay. That's a strong characteristic of a bullish order block. And then what happened? Then we kept moving on up all the way to 20,000. And after 20,000, right, we made this little swing right here. Okay. 20,000 essentially rejected as hard, as you can see, right? Why do I say it rejected as hard? Well, look at the follow-up weekly candle after this 20,000 high. It was a massive bearish engulfing candle, like massive, right? We went from a high of 19,000 in this opening weekly candle. We went to a low of 10,700. We literally went almost a 9,000 drop of the weekly gains in this candle. Okay, but we closed above, right, at 13,477. Moved on up a little bit, got rejected again, and then came back down hard. And as you can see, once we left this channel, right, once we left this bearish order block right here, we came back, and now we came back into February. Okay. February, we touched this old order block that we had, the bullish order block, which was the first one that gave us that initial stint to the 20,000 run. Came back into that same demand zone, right? Pierced it, got completely rejected. Buyers said, hell no, we're going to buy, push the price up, went back all the way to 11,800. And look at what happened right here. We tried to pierce that bearish order block, the blue right here, with these two candles, right? Remember when we went to 11,700, got completely rejected. Sell pressure took over again, boom, sent us back in the previous bullish order block way back here in November or October. And we came back down again. And then this time around, we broke through it a little bit deeper, closed a deeper candle, and then came back out of it again. This time again, we got rejected right around about $10,000, and then we came down again, right? And then we pierced this bullish order block deeper, okay? And this time we stayed almost, if you look at the white, 1, 2, 3, 4, 5, 6, 7, 8, almost 8.5, 9 weeks in this old bullish order block. And then now after that, we've essentially pretty much stayed in this order block, and now we're just moving and drifting sideways. Okay. So this area right here was a strong area of defense for the bulls. Okay. At one point it was, but now it's getting weaker and weaker because what's happening? Well, the people who are wanting to sell greatly exceed the people who are wanting to buy, meaning the supply exceeds the demand. So the price is essentially moving sideways in this order block, okay? There are not enough people like we had for this FOMO run right here willing to pay higher and higher prices for Bitcoin or crypto or whatever, right? So we've retreated to the mean, which was this one right here. Now, if more and more people walk away from the space, right, the average retail investor gets bored. They see a break of the bottom of this order block, which is 5,400. The next one will be 46 or almost about $4,700, $4,800. Okay, that's where we will pierce a new order block to find fresh new buyers. Okay, that and the reason, again, these are also called order blocks or demand zone because these people who bought here, right, they're staunchly defending this zone because they think that this area is a good area to keep buying. But if price keeps dipping below and below, like say it breaks 5,400, then we know that these people do not want to be too much at a loss, and they might sell too. Now, if they sell, well, what's going to happen? Well, price is going to break that order block and dig into this one, okay? And then it's going to slightly pierce this one, get rejected hard, right? Because these are fresh, this is fresh blood, new buyers, okay? These people are just going to say, hell no, the price of Bitcoin is way more valuable than 4,600, and then it's going to go bounce back hard, come back to this zone. This is going to become resistance, right? Supply will again exceed demand. Then it's going to dig down deeper, right? Then we'll touch the bottom of the middle of this order block, which is about 38, 3,900. And then we'll come back again and say, okay, boom, are we ready for our next bull run? And if not, then we'll touch the bottom one, which is right around 3,000. Okay. And then we might pick up a good amount of buyers here, and these guys will absorb all the remaining supply, and these guys are then ready to push it for the next bull run. Okay. That's how you visualize and understand order blocks. Okay. You have to realize, the basics of economics of how exactly supply and demand is created. And clearly in this area right here that we're in, supply greatly exceeds demand, right? We're technically just right at equilibrium because remember, 6,600 is where we are right now. 6,650 is right at the half of this, this order block right here. Okay. Now, if we dig deeper, then we'll find the bottom of this area, right? Remember, this is not just, one number where people bought. It's this entire zone, right? So people defended it at 5,800. Then they'll also defend it at 54 or 5,500. Okay. So it's this entire zone that's being defended. And it's not being defended that hard, clearly, because as you see from the 20,000 drop, we came back down here, went to 11.7K, came back down again, only went to 8.5 or only went to 10, came back down, spent almost 2 months in here, went to 8.5, and now we're just pretty much in the demand zone, right? So, all right, what else? I hope this is good information. Hope y'all are enjoying. And another thing is, I decided to map out the smaller zones where the order block has been pierced and reversal candles within those zones to mark them by these Fibonacci's, okay? So I only did, the 150 and 0, okay, for all the particular reversal candles. Okay, so this candle right here in February was one of the reversals. This candle right here in March was one of the reversals. This one right here in June was another reversal. And you will see how, if I make this bigger and bigger, right, you'll see how, this reversal candle right here, right, in February, you can see that we came back around way out here in March, right? Try to breach this area right here by this candle. As you can see, it touched almost perfectly on this candle, right? We got rejected, but then the next candle really breezed through. This area then became a big supply zone, and we just dumped. Okay, we just completely dumped, right? And then what happened? Then we found more buyers down here, right? So this is your new demand zone, okay? So this candle right here in June, on June 18th. So the high of this candle is 6,800. The low of the candle is 5,755, right? And now look where we are, okay? We're barely able to pierce above that 6,850, just like this candle is not allowing us to do so, because this area signifies that there were once a lot of retailers to push this market up, but now there's just not, okay? And the next final reversal candle is this one right here, marked by the high of 66.47 and the low of 58.58. So I would say that the next incoming low that we may find ourselves in is at least the 62.50 Fibonacci right here, marked by the 50 Fibonacci of this candle right here. Okay, so that's how you look at trying to find, different demand zones within larger order blocks from historical data. Okay, I know this is a little bit too complicated, but I'm going to try to keep reiterating this over the next week, and hopefully, you guys understand. Give me like a, I don't know, an acknowledgement that this is somewhat helping on the chat, please. Do you guys have any questions? Please shoot me questions if y'all have any. I know this is a little complicated. I'm going to try to jump into the 4 hour and show you guys. Maybe, let me just bring this visual order to the front. Okay. So here we are, right, guys? 4 hour. Remember I told y'all that currently we're struggling to get over the last created demand zone that we had, right? So let me lock this up real quick. So the last created demand zone was because of, this area right here, okay? This weekly candle that was completed, okay? This engulfs pretty much this entire zone. And so as you can see, every time that we've tried to pierce this area, right, we've gotten rejected, and we keep coming back down into this, the top of this demand zone. Sooner or later, what's going to happen is we're going to break, come down to the 50, which is this area right here, 62.50, okay? And in my opinion, again, I think that's almost a for sure thing that will happen. I'm quite certain, but we'll have to see, right? Because another interesting thing that's happened over the past few weeks is we have created something interesting, which is, higher lows, kind of like that. We are following the trajectory of this upward movement, but can we sustain it? Because remember that if we break down below this, right, 62.50, we're still kind of right on the trend line, but if we break below, boom, we've negated this entire movement for the past almost 2 or 3 months, right? Because remember, this has been starting since June, okay? So since June, we've created a higher low, higher low, higher low, and now essentially creating another higher low. So we must respect that, or else we're going to come back down to 62.50 and then potentially 6,000 and 5,800. And then below that is obviously 5,500, okay? Awesome. Um, yeah, I know sometimes this kind of stuff could be a little complicated, but I feel like, you know, if we all go through it together multiple times, and you guys ask questions, and you're part of the community, and you keep messaging me or asking questions or commenting or anything, it will ultimately help you better understand how markets like these work. Okay. Another thing about markets like this, guys, is um, you know, when you have such a massive run up, right? Such a almost like a supernova style, parabolic movement. The downside is also violent, guys, right? As they say, like what goes up must come down. Well, same thing in markets too, right? I mean, if something goes up straight up like this, right, it's going to come down, pretty hard too, right? But the thing is, like, if things start moving up parabolic or not parabolically, but like a nice 45-degree movement, kind of like that, um, it's more sustainable that way, right? And so I'm hoping that the next movement of Bitcoin, right, mimics something similar to what happened back here, which is, as you can very well see, right, this nice 45-degree movement. Okay, and I truly believe that over the next few months, I think we're going to test the bottom of this, the top of this order block right here, which is 4,600 to, hopefully 3,800. And then we're going to keep on moving up, right? And I think it's going to be wicks like this that really test it. See back here in 2015, January and then August, right? It's like these deep wicks that just press down all the way down here, and they got completely rejected, right? And then they just, kept on moving up and up and up and did not look back for almost 2 or 3 years. So that's, something that I believe this market will do too. Okay. But there's a lot of stuff I still believe that we need to fix in the market, such as fraud and manipulation, and all the garbage ICOs that are scamming people. And what else? Just having more fiat on ramps, right, for people, more of a real world mass adoption. We need to have banks and institutions be trusting of Bitcoin. More people around the world need to start hearing about its capability and its ability to change people's lives and businesses and corporations. And then you can start talking about, the next bull run where we start moving on up. But I think for now, we need to wait for adoption. We need to wait for, regulation to come in, because regulation will be good for this market, guys. I truly believe it. We also need to wait for things like BACT, which are coming up in November. I think that will give more mainstream, exposure to Bitcoin and cryptos. We need to wait for the smart buyers to buy in at the right prices. We need to, get the weak hands out of the market, right? If you are still here in this market, kudos to you. I mean, you have significantly done a lot of work thus far, and you have a lot of patience. And I think you will be greatly rewarded for it over the next, 6 months to a year or 2 years. Kind of like people in 2015 and 16, right? I mean, those that bought Bitcoin at, 200, $300 back then, I mean, do you think that they care about the prices being at, 6,500 right now? No, they're significantly happy. They're like 30 to 40 times their investment from back then, right? So that's kind of how you need to look at Bitcoin at this current stage too, if you are a believer. Again, this is not investment advice. This is just, my own view of how I see crypto. Okay. I hope that helps. I don't really have a whole lot to talk about. I just wanted to do a quick analysis for y'all. It was a Saturday afternoon. Just wanted to give my Cryptosomniac community something to nibble on in terms of analysis for this afternoon. So remember, okay, next level we need to look for if we want to somewhat get an idea of the next bull market, right? We have to first break above 68.50. Okay, that is a key level, $6,800 area, if anything. Okay, and then we need to see if we can break above 7,200, right? Or and then after that 7,800. Okay, these are small incremental progresses, but remember that we can't even surpass 6,600 right now. So what's the next big support that's going to, help us? It's probably going to be this one right here, 62.50. Okay. So that's the one we need to keep an eye on. Okay, guys. If that breaks, then we, in my opinion, are definitely going to 6,000 and lower. Okay. Potentially 5,500. Anyway, guys, I hope this analysis has helped you. Yeah, I will try to do a more detailed discussion of breaking down the stuff in a more digestible way. Thank you guys for watching. I know this was fast and quick. I'm gonna try to do a better job of explaining this in a more concise manner. But for now, it's really hard for me to explain this in an easier way because it is a really complicated topic of understanding supply and demand zones, understanding how institutional traders and buyers essentially accumulate and distribute. These are all things that take months and years to understand. So I'm going to do my best to try to explain it through the entire next week. Okay. So if you like my analysis, guys, give me a thumbs up. Give me a shout out in the Discord or Moon Lounge. And yeah, have a wonderful Saturday, guys. Take care. Spend some time with your family and be good. All right. Cheers.